Good morning, everyone. Hopefully you can all hear me. I apologize for being a couple minutes late this morning. As you can see, I don't have my video quite working yet. I ran into some difficulties this morning and I decided to just get started right now rather than wait and try to get the video up. So let's go ahead and take a look at what's happening this morning. So we'll go through and take a look at our futures. And it looks like we are down. We are down, let's see, pretty significantly, actually, if my math is correct this morning. We are down about, no, close to significant. We're on the verge of we're about 0.4-ish% across the board. So we're no longer seeing that separation that we saw all week last week. Between the NASDAQ and the Dow, they're very similar. They're within 0.05 or 0.08 of each other percentage-wise. So that is good. So we're starting to even out, and we'll just call this mostly random. VIX is slightly up, and our crude oil is mostly flat. So we're starting out the week pretty flat. Now it is pretty normal for Mondays to be down. So statistically speaking, about 70% of Mondays are down, and then if we are going to go up for the rest of the week, or if we're going to be up on the week, then we trend upwards from Tuesday through Friday. That is a normal pattern. So if we are down today, I wouldn't be too worried about it. I would just watch see if there's a turnaround tomorrow. If we look over at our SPX, you can see yesterday, if you watch the videos, the recorded videos, you can see that we came a little bit below the MA200, but on the SPY, we are still a little bit above the MA200. So today is going to be pretty important. If we go down, we want to see whether or not we go through the MA200 and how far we extend and with how much momentum we bust through it. So it's going to see, basically what we're trying to see is how difficult would it be tomorrow for us to be above the MA200. So today, if we go below the MA200, we're not going to freak out too much. It's not going to mean that, oh my gosh, we're below the MA200. It's really going to mean tomorrow we have to watch very carefully. So today we're going to be on watch. Tomorrow we're certainly going to be on watch unless we happen to bounce off the MA200 today and get a green bar. Then we're in a little bit safer position. Now, if we do go below the MA200 if we stay below the MA200, then we are looking at a roughly 4160 as the next wave of support. So it's not too far below where we are at the moment. And so again, we're not expecting this to come crashing down. Overall, our expectation is that this leg of bearishness will end pretty soon. And we're seeing that by multiple factors and the fact that we are moving into a more defensive position rather than or defensive sectors rather than seeing money just leave the markets is a good sign that we're not expecting this to go significantly lower. Okay. So let's take a look at our sectors. Actually, let's look at our VIX. Okay, our VIX is elevated. It is very high. It is above the previous highs right here. And it's looking like it's a little overdone. So current value today, this morning, is 2201. It went as high as, looks like maybe 2308. And you can see that since COVID, we've never been this high. So I'd like to ask you, since COVID, or is there anything to be panicked about? Are you seeing a giant rout in the markets? So yes, we have a Ukraine conflict. Yes, we have a Middle Eastern conflict. But is there panic in the market? Do we see a free fall like we did in COVID? The answer is no. We have a steady decline. We had a very bullish first half of the year. Then we had a nice, steady, less than 10% correction so far uh, in the market. It's normal and it's healthy. It's normal and healthy for a market to have 1 to 2, 5 to 10% corrections in a year. And this is our first one. Okay. So the VIX level should be coming down soon. And for me personally, a decent idea is to short the VIX going out 1 month. So let's actually, why not? Let's go ahead and take a look at a VIX trade. Oops. Let's go long a put in VIX. Okay, I will go out. I want to give myself some time because I'm not saying that it's going to happen immediately. It might happen today. It might happen over next week, maybe 2 weeks. So I want to give myself a little bit of time here. If I give myself out to just to November, that's 24 days. Half my time value is going to get eaten up in if I'm waiting for 2 weeks. So I'd rather go out at least to this December, to the 59-day expiration. I'm going to buy a put. The current value is at 2202. So if we entered a put at the open, so if I do it right now, it's not going to be entirely accurate. So I will reprice this when we get to the open, but for now, it looks like that we could get into a 22 put at $3.80. If I wanted to be more conservative, then I would be looking for 1% extrinsic value. I got a question this morning is, hey, how do we identify the 1% extrinsic value? And this is the way that we do it if it's not built into your option table. So some brokers like Thinkorswim have a column called extrinsic value. Tastyworks has one called EXT, that's short for extrinsic value. You can just pull that up. And what I'm looking for in this case is if I take 1% of $22, that is 22 cents. So I would go down that option table and look for a strike price on the put side, since I'm playing puts, that has in that column 0.22 in 22 cents, 1% of the current value. Since I don't have that, I have to do it kind of in my head manually. So basically the way I'm going to do that is if I take 18 plus the price, that's $19.32 minus 22, I'm paying $1.68 in extrinsic value. If I go down to 15, I'm paying, what is this? 30 cents? 30 cents? I'm sorry. No, I need, this is 15 plus, so that's $7.03. And here I'm paying 27 cents. So that's way too far out. So 17 plus, where we go? 22 minus 17 is 5. Okay. So I have $5 of intrinsic value here, and I'm paying 85 cents. This is, I'm getting a little scrambled here. I apologize. $1.32 in extrinsic value. And then here, I'm sorry, $1.32 is my price of my option. And here, if I add this 18 plus $1.32, that's $19.32. I'm still $2.68 away from my current value. So I'm paying $2.68 in extrinsic value. Okay, so for some reason, I keep doing the math correctly on the 18 strike. So if we go to the 15 strike, all right, so here I'm $15 and just call it 30 cents. Okay, so I'm paying 705 minus or when we're not quite there. So I'm not going to do this 1% extrinsic value in this particular uh, example. I'm just going to go with the at the money put right now, just because it seems like I'm going to have to go a little too far in the money in order to get it. We won't get good return on that, right? So we'll do 22 put for the example at $3. And again, I'll adjust this after the market opens. So I'll go ahead and save this. This is the pre-market 23, 10, 23 VIX put. Right. Okay. And again, this is not a recommendation. This just take it for what it is. It's an exercise in just showing you opportunities that I see in the market. And if you want to trade it, my suggestion is trade it with paper money until you get used to it. And when you feel confident and you feel confident in the analysis and the risk that is inside of it, then you can trade it paper money if that's completely at your discretion. Just make sure that you're comfortable with potentially losing $377 if you take this trade. Okay. So we've taken a look at futures. We've taken a look at S&P and VIX sectors. We already went over in the aftermarket, so I'm not going to go through the sectors. Let's look at some potential areas where we can find opportunities in day trading. So let's see what's active this morning. Okay, so is this so we'll keep the S&P up here. Okay, I guess right here also. And then let's take a look at, looks like retail is moving, and retail and discretionary. Let's take a look at, well, we'll keep Tesla up there because it's been a great mover for us for several weeks now. So we'll keep that. Similar to the S&P this morning, very similar. Okay, let's go with a retailer. Let's try EL. Looks like it probably has earnings coming up. Okay, not enough activity. How about Ulta? Also not enough activity. Google. Google has earnings coming up this week. Okay, we can do Google. Not super active in the pre-market, but we could do Google. And XLK. Let's take a look at XLK. I would be surprised if it has a lot of pre-market action. Yeah, not enough there. And how about Eli Lilly? Eli Lilly is one of the strongest stocks in the market right now. Not a lot of pre-market, but I may go with it if we don't find another candidate. So we'll look at Starbucks, Disney, and COTY and Shake Shack. Starbucks, Disney, COTY, and Shake Shack. Let's go with Disney. Okay, right there. So we'll take a look at these. These are active in the pre-markets. This one's a little bit more spotty, but there is a wide trading range in the pre-market. So we'll go ahead and trade it because Disney does get a lot of volume during the actual market. So That's why I took it as the candidate. Google for sure gets a lot of activity during the actual market. So we have a wide range of trading and consistent trading throughout the morning. So that's why it's a candidate for here. So these are the ones that we'll watch. And let's look at the economic calendar. Almost forgot about that. And we need to refresh this. Okay, so it looks like new home sales will be interesting for the real estate sector. We have another Powell speech. I don't know what he has to say that was different than last Thursday. Durable goods orders, GDP. Thursday is going to be very, very big. The GDP especially, but international trade in goods, durable orders, they're all coming out at the same time. So this block of reports is going to be very important to watch. And that's about it. That's going to far overshadow anything else this week. Jerome will cause some volatility, but we'll see if he actually says anything different than he's said 5 days, 6 days prior. Other than that, what I would be watching is earnings. There is a huge amount of earnings coming out this week. Over 150 companies are coming out this week. So if I look at my screeners, I say this week in the US, okay, you can see there's over 27 pages here, 20 per page. And then if I look in the S&P 500, just in the S&P 500, there's 160. Okay, so this is going to be a huge week on earnings, and earnings will probably, other than the GDP report, earnings will be by far the biggest factor in moving prices this week. So we would really want to see, are the earnings coming in hot or are they coming in weak? Are a lot of these companies beating forecasts or are they missing forecasts? And we're really going to want to look at the Magnificent Seven. So you see Amazon is reporting here. I don't think they're a part of the Magnificent Seven, but Google is reporting. There's a lot of very large players within the S&P 500 that are reporting. And many of them are Google's right here. Many of them are within the Magnificent Seven. So we really want to see if especially the Magnificent Seven, all right, here's Microsoft, are they outperforming or underperforming their earnings estimates? Because they got a huge boost during that AI surge earlier this year. And if they can't maintain earnings and forecasts, then that's going to put a huge dent in the market. That's going to be a huge downward pressure. If they're able to meet earnings or at least project forward really good earnings, then that'll be a boon to the market. So I would watch the VIX. I would watch earnings. Those are going to be the real focus this week. All right. So we're about 7 minutes before the market. So we'll wrap it up right here. Thanks for bearing with me for being a little bit late this morning, and I will see you in the aftermarket session.